Hi all, this is Ashish Kyal here. Welcome to Elliott Wave News channel by Wave Strategy Advisors. And this time again we meet on Friday at 4. And the today's topic is going to be which indicators do we need to apply when markets are probably not going in any specific direction, and there has been a confusion whether there is going to be a positive breakout or the negative breakout. That confusion itself results into the stand that it's a range bound market and everyone is just guessing where it's going to break out. So during a range bound market, what becomes very important is to look at the levels, the crucial levels which are protected or which needs to be broken for a decisive breakout. And it's wise not to preempt the direction of the breakout. So it is very important to use specific indicators during a range bound market that works well and helps us to provide crucial support and resistance to the prices. Now, it is before I go on to that indicator, a very interesting thing to observe is that in last week's video we have discussed about the importance of the channel resistance, and also about which moving average to apply, and the same has continued to work extremely well. Despite of all the euphoria and all the optimism which was created after the budget session, it's very interesting to see that the price have still contained within the channel. It has still failed to break above the resistance of the upward sloping channel, which I showed in the previous update. I'll share that chart again with you. And what is very more important is after the RBI policy made, it is interesting to see that RBI did not do anything, maintain the status quo. Now it's very surprising that the new RBI governor is also on the path of Mr. Rajan and continues to surprise the street. Nevertheless, it's interesting to see markets reacting positively during post the announcement and closing on a positive note. So this clearly shows that despite of all the events and outcome and the news, market behaves in the way it wants to be. So the news and events are just going to produce some short-term spikes or in the movement, and eventually the market trend resumes, and the outcome and the market movement after the RBI policy is a classic example of that. So during such scenarios, it is important to use the advanced concepts of technical analysis like Elliott wave, Neo wave, that helps us to understand what should be the trading strategy even on an event day. So for example, when Nifty had a move towards the level of 8715, as soon as there was no rate cut announced, that movement was sufficient for wave 4 of C to enter into territory of wave 2 as per Neo wave, and that is what was required for an ending diagonal pattern. So that sufficed very well. And after that, wave 5 started on the upside, which looks like ongoing as of now. And this is wave 5 of C of a zigzag pattern. Now, without charts, it will not make any sense. So let me open up the chart and show you to what I mean by that. And along with that, I am going to apply a range bound indicator, which is a Bollinger Bands. That has worked extremely well when the markets are sideways, and during the trending moves I tend to skip that indicator because then the biases starts coming into place. So let me show you the screen. This is the chart of Nifty which I showed in the last week update, and if you look at this chart, the channel that was shown on last Friday video is still very much intact. Price have been giving all the due respect to this upward sloping trendline resistance. Now, despite all the optimism, markets have been respecting this channel very well. One important thing to observe is that with each passing day, the resistance as per this channel is going to be shifting on the upside. So for now, the resistance has further shifted on the upside because it's an upward sloping resistance line, and that's why the resistance keeps shifting on the upside as per this channeling technique. The other important thing to observe is that we have applied Bollinger Bands right now on the chart. The reason of applying Bollinger Bands, this is an hourly Nifty chart, and the reason for applying Bollinger Bands is based on the fact that prices are moving in a more of a sideways action. So 8722 was the high which was made on the budget, as soon as the budget was announced. 8722 was the high. Nifty made a low of around 8715 just few days back, again a low around 8725. So it has been moving more or less in the same range. So even after all the optimism which was created post the budget, Nifty has not gone anywhere. It has, for the past I think 7 to 8 days, it has been in a very narrow range. And that's why I applied Bollinger Bands, which is based on the 2 standard deviation from the mean. So if you look at this, price have fallen just below this band area on the RBI policy day, recovered back quickly above it, managed to sustain there, went on the upside toward this level, again reversed back on the downside, found support at the lower level somewhere around 872422, and then again reversed back towards the level of 8822, which was made in today's session just at the opening, and is again consolidating. So this bands gives us the resistance on the upside towards the level of 8830, and the support on the downside, which is shown here, is somewhere around 8730, 8715, I would say. So that resistance and that support zones are very important, and it is going to be break on this support or resistance, which will provide a clear direction of the trend. So it's prudent not to preempt the breakout, but at the same time, if we apply the wave theory, this entire pattern which is forming right now, it looks like a wedge shape kind of a pattern. The internal structure of this wedge shape pattern is very clearly defined in our daily research report, the financial waves short-term update. You can refer that research report for finding out the exact internal wave divisions, exact counts, where do we stand as of now. And we have also mentioned one very important level, break off, which will make this pattern void. So that level is going to be very important. If that level is taken out, then this pattern will become void and will result into some other pattern under development. Unless that happens, I continue to see this entire up move post the low which was formed around 8350, as this up move was wave A, then the move on the downside was wave B, and this wave B consumed more time than the up move at wave A. So it qualifies for a zigzag pattern, and as per the zigzag pattern rule, it shouldn't retrace more than 61.8% of wave A, so that qualifies, and A looks like an impulsive, and wave C is ongoing right now. This wave C looks like an ending diagonal pattern starting from the level of 8550. So we will going to stick with this count unless and until we see a decisive break about the upper end of the Bollingers. So it is very important, even when we are applying Elliott wave theory. Along with that, we need to apply certain classical indicators like Bollinger Bands. At the same time, if you look at RSI, there has been some divergence which we are seeing, but nevertheless, this divergence is not going to carry much of an importance unless price is confirmed. So we need to see price confirmation, and even RSI has been contracting within a zone. So RSI itself is forming a triangle pattern. Now that's altogether a different concept, but RSI itself is forming a triangle pattern here, and we are clearly seeing some loss of momentum on Nifty. At the same time, when Nifty has been touching about new highs over past 1 month, Bank Nifty has been failing to do that. So there is some divergence between the indices. But again, it's too soon to conclude anything. We need to wait for a decisive break either below the support levels for confirmation that a short-term top is in place, or if there is a breakout on the upside above the upper end, then that will confirm that the uptrend is extending further. So very important indicators that one can apply during a range bound technique is probably an RSI, and channels continue to be very crucial. And along with that, Bollinger Bands works extremely well during sideways market, and the break above or below those bands areas are going to help you understand in which direction you need to trade. So unless and until you see a decisive break, you can continue to adopt a range bound trading strategy, because in case of a sideways market, range bound trading strategy involves selling near the resistance, keeping a very small stop loss, and buying near the support, again squaring off the short positions and going long near the supports with a very small stop loss. So what will happen, as long as the range bound action continues, you stay in the trend, and as soon as the breakout happens, you stay out of the range bound and adopt the trending strategy. So that is how the strategy should be defined, and should be changed based on the market dynamics and the market movement. So what we saw is on an hourly chart of Nifty, you can apply this concept on even on the daily charts of any stocks of Nifty or commodities, gold, silver, crude, copper works extremely well. Even on this commodities, you can apply the concepts. So I think that should be it for today. To conclude again, use Bollinger Bands, and I think we should be seeing a breakout very soon. The direction of the breakout is going to be again confirmed by price, so let's wait for price confirmation, and we'll again catch up next week same time. And before that, I just again an announcement. We are conducting a training on 18th, 19th March, which will be focusing on a lot of these techniques. How do we combine basic technical analysis tools like Bollinger Bands, RSI, ROC, a very different way of looking at these techniques, along with NeoWave. And also, we are introducing time cycles, how to look at time cycles, both from the Hus time cycles perspective, from Gann time cycles perspective, how to combine those various techniques together and come out with a very high probable trade setups of what should be the outcome, and even the bar technique, which is very important. So those things will be covered in that. So if you have any questions before that or with respect to anything on technical analysis, feel free to write directly to me at ashishkyal@wavesstrategy.com, or you can also call us on 9920422202. And if there is any discussion you want to participate on, you can visit the website wavesstrategy.com and start participating and sending across or uploading your charts there. So that's it for now, and thank you very much. Have a wonderful weekend ahead. Thanks.